Hey everyone, welcome back to Talking Success. Before we get into this week's episode, I think it's worth noting some of the issues that have risen in the press over the last week or so since our last recording. Financial crime is still playing a significant part across the financial services landscape, both here in South Africa and across the continent. We've seen one of the crypto companies being pursued for $10 billion in fines. We've seen one of the big financial services providers here being sued by the SARS, the revenue services here, for an astronomical amount of money. And that's why it's really important that we have RegTech solutions and RegTech solution providers such as LexisNexis Risk Solutions, who have been amazing sponsors of this podcast. Timing is right. If you're looking at compliance, you're looking at fraud prevention, you're looking at all of the areas around regulatory controls, please do give our friends at LexisNexis Risk Solutions a shout. Easy for me to say, but the link's down below, and we seriously thank them for all the support they've given us and for us to reach over 100,000 downloads of Talking Success, which is just mind-blowing. But that's enough about me. Let's get on to this week's show. Hey everyone, welcome back to Talking Success. Big announcement this week, 100,000 downloads on Talking Success. A huge thank you to everyone who listens, to all our guests, to our sponsors, and really to everyone who's contributed to the show. Honestly, this has probably been one of the most interesting journeys I've been on in my career, talking to some incredible people about their careers, their businesses, and the industry as a whole. I've learned so much, and I really hope that people that are tuning in have also managed to gain some knowledge and insight into this wonderful world of FinTech. And today is no exception. Today, everyone, I'm joined by someone that I've known for about 7 or 8 years. We were just talking before the show, and I can't remember where we met, but we did, and we've kind of been in contact pretty much on and off ever since, over the last 8 years. And Andrew, I'm going to let you introduce yourself in a minute, but he founded a FinTech, and when we first met, I think it was him and one other person, and they were doing one part FinTech, and over the years, I think there's been some pivots and there's been some interesting journeys, and I'm here to learn all about sort of Andrew from an entrepreneur, really. He posts a lot of really interesting stuff on LinkedIn, which I highly suggest you give a follow to. His link's down here. And this is a kind of a conversational podcast, probably touching on the industry, but really on Andrew's journey. Some of the lessons he's learned, some of maybe the challenges he's faced, and really where he's got to now and what the future holds for him. So, Andrew, if you want to gush over me a little bit more like you did before, then you're more than welcome to. This is a free platform, and for you to say all the nice things that you want. And remember, we've got a really good editor, so if you say anything that I don't like, I'll just edit it out. Anyway, over to you.
Yeah, Darren, thank you very much for having me. It isn't a lie what I was just saying prior to us getting started. I really have enjoyed following your journey and just how you've carved a name in the market. You're doing some incredible things. So massive congratulations to you and the team. And I love watching what you've done on this podcast. So very, very grateful to be here today.
Well, thank you. Anyway, I won't say any more. Thank you. Listen, let's start with an intro. Give us a quick overview because, as I said, we met sort of 7-8 years ago. Tell us how you got into this world. The company was actually, correct me if I'm wrong, but it was FOMO Travel at the beginning. I don't know whether that's still a brand of yours or a service line, but that was the original company. What are you sort of doing now, and what was that journey been like?
Sure. Look, I mean, we could take hours chatting about the journey. So I'm going to try give a short snippet of it and just try condense it. But 7-8 years ago, it's actually 8. 8 years ago, I came up with a concept where it was a travel concept, essentially identifying a problem in the market where a lot of young South Africans were battling to travel. And I really came down to the problem statement that it was due to the upfront cost of travel, paying in ZAR, paying for an overseas trip that includes, a whole package or a 10-day holiday is costly on many, many South Africans, the majority of South Africans. And I think even still today that problem still rings true. But effectively, the concept was a savings plan or payment plan towards a future travel date. You would be able to secure that travel experience with a deposit, and you would be able to pay that over a period of time, be it 3 months, 6 months, depending on where you travel. The key component was that you would save towards it and you would pay in full prior to that travel date. And I think really where I was at that stage of my life, I had little to no experience in the tech world. I also had little to no experience in the travel world besides actually traveling myself. So I was fortunate enough to travel prior to me coming back to South Africa, and I got to see the benefits of being able to travel as a young man in his early 20s, and I really saw that as a major benefit for my life. So it was a problem that I wanted to solve and get more people traveling. But when you actually unpack that problem statement, you quickly start realizing that, what type of business are you building? Are you building a business that is a OTA, online travel agency, or are you building the payments leg within that? And that's really, kind of what we will get chatting about later down the line and what I am doing today. That business was started. I self-funded the startup. So I had some money from working abroad. So I stuck my whole savings and life savings into it. And effectively, I had previously, just before starting, had just read the lean methodology startup book, and it was all around the premise of failing forward, building MVPs, and really testing and validating if your concept actually had legs. And the way I looked at it was, let's get to market quickly. I think I was green, I was energetic, I was just, full of zest to kind of get to market and see if the concept would work. So the way I did it was I really built a simple facing online travel agency, procured some products, through some suppliers. One, really nice one that we really got some good traction on was through Beachcomber and Club Med. And that would be over to places like Mauritius and some overseas trips with Club Med. And just started selling and marketing through e-commerce, social media platforms like Meta, Facebook back then. And quite quickly, I started seeing that there was consumer intent and interest into what we were offering. It takes a 20,000 Rand holiday. It breaks it up into the period of time that you want to travel in, be it 6 months ahead of time. And that really was lighter on the customer's wallet. And what you're really doing then is you're breaking down that big elephant payment into bite-sized chunks, and therefore getting more people to commit to that travel experience, and therefore increasing sales at that time for us, but now what we're doing for other travel providers. So tested, validated, quite quickly got some proper traction, and within a year we were kind of on our way. At that point in time, again, going back to now building a first business in the market, the whole back end was being run off Excel. So now you can imagine that you start getting some scale, and you're now dealing with 50 to 100 to 200 customers, travelers that you now need to manage those payment plans. And the way that I would collect at that time, even tokenization through card, what didn't even exist then. It was through a direct EFT payment into my bank account, and my business bank account. Sure. So what would end up happening is that people would just drop the money in there with no proper reference. I would have to try now allocate that into the right type of payment plan and actual travel booking that customer was going on. And I could quickly start seeing it's spiraling out of control. And fortunately, we were accepted into a very renowned accelerator program called Techstars. It's a global accelerator program, and thankfully it was hosted in Cape Town that year. And we were very lucky, I think, at the stage of business that we were, and some of the other counterparts that was also part of the program. But 10 companies were selected. And it's actually, if we want to put dates together, that's around the time that we would have met in the Rise building out in Woodstock. I'm pretty sure that's where we got connected back then, just putting together there. But it was through that accelerator program where in a 90-day period, you really iterate on your project, and you look for the solves of what you're battling with, and you connected with successful people and people that have done this time and time again. So I was lucky enough to get some incredible mentors through that 90-day period, and in that 90-day period, we quickly looked at my tech stack, which is really a kind of a WordPress website front end displaying some packages, and in the back end being powered off a Excel spreadsheet. That it was identified that, look, you in a way have got two parts to your business, and in a way you are building two businesses here. And it was that clarity that led me to start thinking how I need to pick one, and that when I really sat at night, and that straight common entrepreneurial thing, late at night and can't sleep, and you worrying and stressing about my life savings that I've invested into this company, like how am I going to get through this? That I really started understanding what it is that I was doing. And although I love travel, it wasn't that I ever wanted to actually sell travel. It was the problem that I wanted to solve. And that started guiding me down a road, and a new road of understanding alternative payments, understanding what I refer to a lot of the time as prepayments or payment plans. And quite quickly, I went the next day to the program and said, this is the direction that I want to go. And, back then it was just an idea, and it was called FOMO Payments, based on FOMO Travel. And I quite liked the name of FOMO, fear of missing out. And I started tinkering with the team that I had, and started working out a treasury system that would be able to collect, reconcile, and settle these payments on an automated, scalable basis. And that is really where Layup was born. That's where Layup got born. I didn't have the name at that stage, but that's where, the first pen to paper was done. Concept started being built out. Scoping of the tech stack started being built out. And I actually started using revenue that I was getting from the travel business and actually plowing it into the technology stack that was essentially going to be used as an MVP to power the FOMO travel business. And that's the current business that I'm working on now. I've been working on that business since 2018, so close to 6-7 years now. We've built out a variable recurring payment system with a core differentiator that we do not do credit. We believe that the mass market of this country and Africa and third world countries are predominantly locked out and being locked out and being financially excluded, and we had to solve financial inclusion. And through learning the market and understanding payments, through this journey, I've quite early on came across laybars and innovated within laybars, really due to the fact of COVID and us being in the travel and events industry and having those industries be demolished quite quickly overnight, and no one could travel, to pivoting and innovating in that space, to then diversifying in that and launching subscriptions, launching a pre-order product, launching stock files as a product, and every single one of them are financially inclusive prepayment services that enables a business to be able to tap into more customers that previously were disadvantaged. Consumers, the forgotten consumer, that effectively has a thin file, that is over-indebted, that doesn't have the KYC information in order to go and apply for credit. And when you look at the credit bureaus, that is a larger market size than your active credit users in this country. So it's the real idea is kept me so excited all the way through. I'm just as excited as when I started, and I know that there's still a long way to go. But I think that we've built something pretty impactful and something that can help change the lives of many people.
Amazing. Listen, a phenomenal story. I've got loads of questions, right? Let me start with my first. So I think for people that are from maybe outside of Africa that are listening to the podcast and maybe getting their heads around, so we've got BNPL, we've got Layup, we've got Pure Credit. When it comes to, actually, can you give us a kind of user case, right? So let's pick a person, a consumer. What sort of LSM are they? What sort of product are they buying? And how does this work?
Welcome to Business Beyond Borders, the go-to podcast for CPA firms seeking transformative insights. I'm your host, Lawrence Whittam, and with each episode we'll uncover key insights, best practices, and invaluable resources tailored for CPAs. From trending strategies to diving deep into outsourcing and offshoring, our experts will help in all areas of your business.
Certainly. So we are a variable recurring payment system. We will enable the business through the technology stack. So the business, based on the vertical they're in, the size of business, and what they're looking to solve. So you could pick one of those 5 prepayment products that I spoke about. But let's, for example, say it was lay-by in the retail market. The merchant itself would be able to pre-configure how they want to offer that lay-by. That would be the percentage that they would like up front, be it 10 or 20%, and the length of the lay-by based on being 3 or 6 months or at any given time that they select. That becomes an automated digital way to now offer a payment method that's in Africa a widely used payment method. It's a massive market when you really get into the guts of it, and it's still today, in today's day and age, it's entirely manual, meaning that the customer, that disadvantaged customers has to do it in store, has to come back to make each subsequent payment, which means that they have to pay additional money to take a taxi in order to get back to the store. There's no way to manage it. There's no updates or timely reminders, and therefore it becomes a very cumbersome, admin-intensive payment method to offer. We've totally stripped that away and streamlined that entire end-to-end process. So from a user perspective, a user now can do that online through e-commerce, be it multiple plugins or directly via API on the merchant site, or in store. We've built the technology on an Android card machine. We've through our APIs can directly integrate into Till. This means that a consumer doesn't need to carry an ID on them. They can instantly sign up and be verified. They can then make that transaction through multiple ways, payment instruments. And then once activated, they get the benefit of making those future installments from the comfort of their home. They get timely reminders all the way throughout the payment plan journey, and they can manage. So they can make a payment, they can request to cancel, they can pause it, they can communicate with the retailer if they needed an extension or want to add on or remove items along the journey. So this creates efficiencies. This creates a better customer experience, and therefore you're creating longer customer lifetime value, you're increasing revenue for that business. Of course, no business wants to have someone start and not complete. They want more sales, and that's ultimately the USPs that we do for the business. So it's a powerful bit of technology that has taken time and us learning, I think, really through the process of iterating and perfecting what it is that we built. And I think, I'm very proud of the team, for what we've done to date.
No, that's amazing. A couple of questions. So does your model, it might be down to the merchant, but does it operate like a BNPL, so there's no additional cost to the consumer, or is there an interest or a fee applied to the consumer for having this service, or does the merchant pay? Where do the commercials sit, without giving too much away?
Sure. No, I'm happy to share is that, first of all, from a consumer's perspective, it's entirely free. This is why we say that we're really making headways in creating financial inclusion. There's no credit check. And I think there's a really untrue statement that BNPL really provides, is that BNPL is a credit solution. It may be told that it's interest free, but if you miss a payment, and or do not pay within that time period, you will be charged late fees and interest. So that it's really hidden in the T's and C's. But ultimately, in our world, there is no credit check, meaning that foreigners can use it. People that have bad credit records can use it. People that don't want to go through credit checks can use it. And if they miss a payment, there's no late fees or penalties charged to the consumer. The system will essentially amortize over the rest of the payment period, communicate to the customer that they have missed that payment, and then they have a future opportunity to make that payment. This is a saving solution. The great way of how I try to define it between both us and BNPL is that it's postpaid versus prepaid. In a postpaid world, if you're going to go and you're going to provide 2,000 Rand lending over and pay the merchant immediately and collect from the customer, you're moving into the credit world. And that's essentially going to have risks attached to it, rightly so. In our world, there is a payment that is made. We collect those funds, we reconcile those funds securely and safely, and then we settle those funds over to the merchants. So what we're doing is we create an incremental revenue, and we are tapping into a wider customer base for a business to do this. So in the instance of a direct labor, you have large business, AAA retailers that are doing this in the billions of rands per year, but in a manual way. So we here to say, here's a bit of technology that's going to automate, digitize, and create efficiencies for your business to optimize this already existing payment method in the market, and therefore it's going to benefit your end customers and benefit you, which is a win-win solution for both parties.
Absolutely. For the retailer in sort of this example, do they have to consider sort of their stock and storage and things like that? Because if I'm buying an item now, it may take me 6 months to pay this off. Am I guaranteed that item is still going to be there in 6 months? And do consumers have that concern, or not really? Is that not really a thing, or?
So I know we're honing in on the Layup product, and I'll talk about another product that we've got available, but it's in the Layup instance, it is governed by the CPA. You are required to reserve and hold that stock. So that can be an objection for some businesses. But when you start tapping into your really larger, more established types of businesses, stock management is really not a thing. What you're doing is you're creating a existing method and making it better, cheaper, and faster. The requirements on the customer, on the merchant side, is to reserve and hold that stock. Again, they can determine how long they want to offer that payment plan or labor. So if stock reservation was a concern, they can shorten that labor to 2 or 1, even through a couple of weeks. And what we've seen in a lot of instances, especially with tech-related products, is that why the consumer is using our solution is because today is a great example, the 21st of the month. Most people right now, right at the end of the month, are really battling to kind of get through to the end of the month and wait until payday. They could see something that they really want be it the space gray iPhone that they really want, but they don't have all the cash in order to go through it and make that purchase. So now they can use our solution, put down the deposit, secure that item, and then in 4 or 5 days' time, receive their salary and make that commitment and complete the plan, interest-free at no extra charge. And that we're seeing that often is that a user's using us as a short gap savings plan to secure, to save it now and wait 2 weeks or even a month and get that item. Where in traditional labor, you generally see a user wait the full term, be it 3 months, and come back into store after 3 months and make that final payment. So by doing so, what we have done is that we've flipped the kind of data on its head and actually increased sales for businesses and increase basket order for businesses. So the basket order is really increasing, meaning that a user is now going for the iPhone 14 as opposed to maybe the iPhone 12. The other interesting thing that I want to add is that there's a certain point where credit becomes too risky for a consumer that's on the fence in terms of their credit rating. Let's look at items like that are 50,000 Rand and above. And there are a lot of items that people want to buy in that way.
Yeah.
Now, there's very few lenders that are going to now offer credit to someone that is wanting to borrow 50 grand or 100,000 Rand. And the interesting thing in our world is that a user can check out with our system and buy anything for any value. And we've seen payment plans being checked out of excess of 500 grand. So, where you start hitting a wall eventually where very few lenders are going to lend on that type of amount. Whereas if someone saves towards it, it's going to be, I'm going to put down a deposit, maybe that's 10% of 500 grand, that's 50 grand today. And then I'm going to have 12 or 24 months in order to save for this very, very expensive item. And I can share what that was. It's, I think, a very impactful type of product, which was a burial site, a family burial site, where this person was planning for the future. He wanted to ensure that he had his full burial site for his whole family locked in, and it might be part of a sad kind of story, but he is. We view as a financially savvy individual that is not going to wait until the last moment and then suddenly be stuck with a big bill that he has to come up with and then chase to get credit. He's able to now plan ahead in a savings methodology and make sure that he is not under pressure when that very sad day comes.
Wow. Amazing. The utilization for these types of, or this type of product and service is probably beyond what people may think, right? You mentioned kind of phones and tech, but actually there's other things that I'm sure, if you're a homeowner and, you're going through tough times, especially in the current economic climate, and maybe you've missed a couple of your bond payments, but you really desperately need to fix the roof on your house and the insurance won't cover it. You've got an income coming in, you can pay this off. That might be more of a, I need this now. But if you have got, I suppose, some other home improvements that you want to do over the course of the year, then, this is quite a good way of doing that, right?
100%. Home improvements is right up at the top of our list. In a lot of ways, that's in store. That's where this terminal tech really becomes handy. We are, roll that out in store. You can think about building material, your bricks, your stones, your cements, and someone's going to buy something 50 grand and above, and they're going to now put it on a payment plan. There's, we've really focused on really the labor solve in Africa and South Africa. And it's definitely the place where we went from travel, where that got demolished in COVID, to having to focus on the retail sector over that COVID period. And that was labor. And then through that, we've kind of really developed and progressed our thinking, which we refer to as a variable recurring payment system that can enable business through multiple prepayment services.
Yeah.
So you've got your subscriptions and pre-order stock files, really interesting product, and save now, buy later. We spoke about holding the stock item. In a save now, buy later model, there's no stock reserved. You're essentially using us as a way to save towards a goal, i.e. travel or a bed. And once you get to that goal, you are benefited through discounts and rewards and cashback. So it's another way to entirely look at it, and something that we also think is a very exciting product that we have in the midst.
Can I ask you a few questions about this, the save now, pay later? Because it kind of fascinates me in terms of, a lot of the work that I do, and we're talking to, consumers, we're talking to people at all different sort of parts of the ecosystem here in South Africa. And I don't think I'd be foolish to think that there's a great deal of trust in financial services, especially in the banking world, here in South Africa. We talk about 80% of the population being banked. Yeah, well, 60% of that 80% get paid into their account because they're told that's the only way they can get paid. And on payday, they go to the ATM and they withdraw their cash, goes out of the economy, goes out of the digital economy and becomes cash again. When someone is using your product, certainly the save now, buy later, are they holding that in an accessible wallet? So are they able to say, listen, I want to save for a new bed, as you mentioned, but actually something's happened and I really need that money to be utilized for something else? Do they have that sort of flexibility, or are you kind of trying to educate the consumer that actually, stay focused on a goal, stay focused on what you're trying to buy, and, make another plan for, life's, mishaps and, things get thrown at you. So how does it work?
So the way we built it is that we are a B2B, B2C company. So we do partner and, remember, enable that business. Yeah. So effectively they are saving towards that brand and merchant. It's not an open-ended savings plan where you are going to put in an interest-bearing account or anything like that. We are what we refer to in the market as a TPP, third-party payment provider, sponsored through our bank and PASA. So totally licensed in order to do this, and the customer essentially is going to save towards that. If they opt to change their mind and get their money back, they'll cancel that savings plan and be refunded all those funds. The benefit is if they reach that goal, that they will be receiving an incentive, be it either cash back, meaning that, i.e., I'll save for a 10,000 Rand bed, but I only had to pay 9.5 grand actually effectively for that bed. So, very exciting product. And really it's just, it's a way that we view a innovative solution to aid businesses in being able to track more customers and increase sales. We have grown our user base into hundreds of thousands of users that love to use this type of solution. We see a very long customer lifetime value, where consumers are able to create as many saving plans as they need, and they come back and they use it again and again. There's a very interesting science behind what it is that we're doing, in that there is a dopamine hit when someone starts a goal and finishes a goal. That is very rewarding when someone is able to say, I set out to again, we're using the bed example, set out to get this bed, now I get this bed, now I get to enjoy it every single night. Knowing that I didn't actually go and put it on credit, where when you get the bed and maybe the bed isn't as comfortable, or maybe something less, less expensive like a shirt, and you now tear the shirt or get stained, but you're still having to make these repayments, which starts becoming a very grudge, kind of way of paying, and that's where people a lot of times default and aren't happy with doing what they did. So we view it as systematically learning to save for something worthwhile on the horizon, and that once reached is a very rewarding thing. And those two products are savings related. So lay by and save now, buy later. Stock file is another one.
Sure.
I think subscriptions is also a very interesting one. Subscriptions being something that where someone needs to collect a product or a service on a regular basis, like in perpetuity, where someone can now set up a subscription and manage it in a very effective, easy manner. So how are you doing that currently? In most instances, if you do that on e-commerce, it's either set on a debit order or tokenization, but as the user, you have no place to manage that and get communicated throughout that subscription, which is frustrating. Now, if I set up a subscription for an online course or something like that, I would like to be communicated with that 24 hours prior to that I've got a payment reminder and that this X amount of money is going to go for this item. And I haven't yet seen that really properly done in the market. And I think based on the system and the tech stack that we've built and the user journey that we've developed over the years, it's a very exciting product that we're also rolling out in the market.
And then on the consumer side, do you see, maybe this is kind of the model, or maybe this is what already works? Do you see the consumer having an app, right, or a window into sort of Layup and having a marketplace, and where they're able to go and sort of go to 5 or 10 different merchants, and some they may be doing a lay-by, some they may be doing a save now, pay later, some they may be doing subscription. Do you see that being sort of in one app and actually being B2C as well as B2B2C, or where do you see your model going?
I mean, certainly. I think any type of technology that you can build that makes it more convenient and efficient, you should go down that route. I think right now we have a web-based app. So, it's done on the web. It can easily be pulled into an app type of format onto your Android device. That's how you can get in. And of course, it's all clearly labeled and broken down in terms of which product that you are saving towards or paying towards. In time, I definitely have it on the cards. I would love to go at 1,000 miles an hour and have everything that's available. But one needs to consider, and maybe that's back on the entrepreneur side of the journey, is that I feel like you've got to go through hurdles, and you at the right timing, at the right space, when the market is at the right time, and we've iterated and learnt enough, we can then execute on an app that is obviously very scalable and workable for the end consumer. Right now, what we do have is we've got a merchant app in the market. So we decided to really focus on the merchant side as one of our first steps. That's the VAS offering on the terminal. It's also being pushed onto the Google Play Store and App Store. And that is a tool for a business now to instantly be able to set up a lay-by, a subscription, a pre-order, a stock file within less than 60 seconds, take a transaction, activation transaction, and then connect the customer to the business throughout the payment plan journey. They do not have to write it down in a book. They will get timely reminders. They will be able to manage that all through the app, and they will obviously be able to take future transactions if the customer wanted to come back and actually make a payment at point of sale. So that's a very exciting product for us. I think there's some incredible terminal providers out in the market that really have carved out a massive market size, and I see that as the first step, really. It's always a bit of a chicken and egg. So first step is really try acquire and partner and create relationship with as many businesses, understand their problem statements and what they need what they need us to do for them, and then ultimately that will translate into a great customer experience that does all those benefits and USPs that I spoke about from the customer side.
Last question for you on that, and then I'm going to bring it back to right at the beginning of the conversation. But I was just thinking, and I'm sure you've probably already answered this, but from a merchant side, when do they receive payment? Do they receive it only on sort of final sort of settlement, or do they receive this on a drip basis?
So a merchant can decide. We've, as part of the treasury system that we've been building for this long period of time, so we can settle daily, weekly, monthly. Okay. We are here. You see, the thing that we've kind of viewed is that we're not here to sell a product to a business to say, this is the rules, this is how you need to use it. We are entirely flexible as a system. You've got multiple pre-configuration settings. These things can be editable by you as the admin. You've got admin rights, so you can have multiple merchant users and admin users that have got access and some that don't. You can manipulate that based on maybe seasonal or campaigns that you're driving. It works on a per product basis, so you could have one product that is high valued at a certain length and a certain percentage, a lower value product at a certain length or value. So that system is going to work for the business. So if a business said to us, Andrew, we need those funds as quickly as possible in order to action stuff on our side. Let's take a wood maker. I need that deposit in order to be able to buy the materials to start making this item. So we will settle you all payments. In other instances, a business is saying that, from an administration point of view, it's not effective for us to be able to collect and reconcile these incremental payments. What we would prefer to do is have you hold those funds up until a certain period when we can call on it and you settle us those funds. So those are the benefits of working with us, is that every single merchant will be customizable and be set up in a way that best suits them and how they serve their customers.
Amazing. I'm going to bring this back, Andrew. So the business started on Excel and WordPress. Okay, clearly it's got a bit more advanced than that. If you were to do this again in February 2024, how different would you do it? And do you think things like generative AI, I'm not going to get into the whole discussion, but do you think things like generative AI and low-code platforms and all of these tools that are available to kind of us as entrepreneurs and as founders, where we don't have to then go and hire an expert team of developers, would you have done things differently? Do you think you could have gone to market quicker? And if you could just answer the three questions at once, what advice would you give to people who are considering, building a startup right now, whether it be in FinTech, or whether it be in FMCG, or whether it be in health tech, or whatever it may be? What advice would you give?
Sure. So let's start at the top there. So, good old saying is like, would I do it differently if I was doing it over again? Based on who I am and what I needed to learn, I needed to go through this road, this roller coaster of ups and downs. I think it's molded me. I've got the scars to show for it, and I think any entrepreneur, successful entrepreneur, and by no means am I saying I've made it. By no means, I'm saying is that you always see it when you hear the success stories about how they have struggled, how they have gone through dark times, how they have managed to figure stuff out. And a lot of entrepreneurship is about problem solving and working through those difficult times and then enjoying the upside. So, I wouldn't do it. I wouldn't change it any differently. But I think from a understanding now where I was, so if I had the knowledge that I needed to acquire over this period of time, but I was starting today and I was sitting with this knowledge, there's a lot of shortcuts that one could make. I think the financial services industry itself has advanced drastically in this 8-year period. From your PSPs in the market to banking APIs. I think it took us a better part of a year and a half to acquire our sponsoring license and license through Parser. So those things are just better now, and they're more rapid, and people are able to get that type of stuff sorted faster. So I think there would be much quicker shortcuts to achieving a lot of what it's taken us this period of time, but you would also make other mistakes. If you didn't know the journey and know what you were going through and then be super passionate about it, then I'm sure there will be other hurdles that you would have to overcome and shortcomings. So second part of the question, what would I give advice to if someone was starting this? Is that where you're at, eh? Have I missed one?
Yeah, no. I'll come back to the generative AI one in a minute, but go on.
Okay, generative AI. Look, generative AI, just quickly on that, is an incredible product. We are definitely excited about it. I think there's a huge amount of benefits that one can get, and ultimately we sit with and serve a lot of people with thin file data. The mere fact that I'm saying thin file data is the exciting part around AI. That's where you can really start creating that financial inclusivity, aiding someone to ultimately become credit worthy. We taking people down a journey, and we want people, and I think it's important to note that I think credit has got its value and it's got its space in the market. We champion and we bang the drum around, being on the other side and valuing savings over credit, but credit really does have its space, and we just view it that credit should be used for the right reasons, and a lot of consumers aren't financially educated in using it in the right reasons. And if you can create that education through savings type plans, you can probably educate more users to better understand it and aid them in ultimately getting to that stage of having a right beneficial FICO score that gets them that access to a home loan and access to a car loan or access to a student loan, and those are really important. So AI, exciting, something that we will have to tackle at those certain hurdles as we get there. So someone starting out, sure, it's a hard one. I think that you've got to take the leap. You got to take the leap of faith. So it's like you've got to get off your chair. You can't talk about it. No idea is a business until you really get your sleeves rolled up and get grafting. Sometimes people think the idea is like they've already written on the back of a napkin and it's worth hundreds of millions of dollars. Ultimately, you've got to get to market. You've got to start working on it. You've got to get people to buy into what you're doing, and a lot of that stuff is the stuff that takes a long time. You've got to get investors. You've got to get money, and those things take a while. So first it sits with the founder. I think you're signing up to a difficult journey, and you can't then turn around and back out and be like, oh, well, these are things that I shouldn't have to do because I'm the founder. I think the buck begins and ends with you. And ultimately, when the chickens come home to roost, that's ultimately, you're going to be the last person standing. So I think that ownership, extreme ownership, is required as the founder, and then yes, of course, the idea you've got to be fully invested in it, that you can sustain a very long period of time of probably some ups and downs and hard times. So if you're in it for a quick buck, if you're in it to really kind of, I don't know, prove something and quickly get in, get out, Most times, you just see it time and time again that it just kind of folds over and people kind of lose interest. So yeah, make sure that the idea is sticky enough and is worth the squeeze. Otherwise, probably better off, joining a startup and learning from that startup and then figuring things out from there.
Yeah, you made a good point. I think people look at entrepreneurs or founders and go, "Oh, it must be such a great life." You don't have a boss. Well, we all do, whether it be shareholders or whether it be investors or the banks,
Exactly.
right? So we absolutely do. And yeah, they may see pictures of us, I don't know, playing golf or being at this event or whatever it may be, and thinking, "Oh, it must be the life." Yeah, okay, that's cool, but we're working 16, 17-hour days in order to get there, and most of the time you're standing there with sort of matchsticks in your eyes trying to stay awake. So listen, I think anyone that's going, again, my advice, anyone that's going into this and thinking about becoming a founder, becoming an entrepreneur, it's not for the faint-hearted. As Andrew quite rightly said, there's ups and downs, and it's never plain sailing. You may have a great year or great couple of years, and suddenly something happens in the market, like Andrew was saying with COVID. All of a sudden, the business is gone overnight. No one could predict that. And I think problem solving and being able to pivot and being able to look at what the problem is. Don't build a solution if there's no problem. And I think that's one thing I've learned over the years from people like Andrew and others. Don't build something and go, okay, I've built something, now let me go and find the problem. Have the problem and then build something that's going to address it. So that would be my kind of advice as well. Andrew, listen, I thoroughly enjoyed talking to you today. Thank you. Go on, you were going to say, sorry, I cut you off.
No. Thank you for your time. It's a pleasure. If I get an opportunity to come down to beautiful Cape Town, I will definitely give you a buzz and we can connect.
You didn't know that I've moved to Joburg, did you? But I'll catch up with you separately on that one. Everyone, I'm going to put some links here to Andrew and to the business and some other things we mentioned during this podcast as well. Feel free to I'm saying this, I'm offering him for free, but feel free to link to Andrew on LinkedIn or at least give him a follow. He does post some really, really insightful things about his entrepreneurial journey as well as sort of industry as well. And I love reading them. So I think some of them are tongue in cheek, and I do raise a bit of a smile every time I read them because it resonates a lot with me and sort of my journey. Listen, I know we've seen each other between the 8 years, but let's not leave it another 8 years until we do this again, right?
100%, Darren. Thank you so much. We'll catch up.
Thanks, everyone. See you again.